Now I'd like to discuss how past resistance becomes future support and how past support becomes future resistance. So let's get started with how past resistance becomes future support. See, as the market moves, if the bulls are going to maintain control, they're going to want to drive this market up. They're going to want to make higher highs and higher lows. See, and so what you have here is you have more buyers and sellers, more buyers and sellers, more buyers and sellers, until the bulls resist buying. And when they resist buying, they create a high. And that high is called resistance. Usually at that high of resistance, the market starts to retrace or pull back down. As it comes back down, it's almost like the bulls relinquish control to the bears, and they let the bears take the prices down until they come in and start to support the price, hence the term support and resistance. Now, when you have a level of support, which is usually two candles on the left and two candles on the right, whose wicks are higher than the center low, at that level of support, when the bulls take over, they come in and they support the price, they're going to want to make a higher high, higher than the previous high. And so here what we have is we have the bulls come in, take over, they create a higher high and a new level of resistance. Now let's really look at this chart. At this level of resistance, here's the past level of resistance. See, it says right here, past resistance becomes future support. So if this is past resistance, wouldn't this be to where the market comes back down, bulls relinquish control to the bears, bears bring the prices back down to past resistance to become future support, and here you see how the bears took over, they brought it down to support. Now, it's at this level right here, past resistance becomes future support, that this becomes a great location for a trader to be looking for a bullish signal to get in the market to take advantage of the next up move. So if you were trading this and you were able to identify past resistance to become future support in this uptrend of higher highs and higher lows, and you ended up buying here, what you have is you have the market coming up, more buyers and sellers, more buyers and sellers, more buyers and sellers, until the bulls resist buying, and then the market's going to create a high and pull back to past resistance becoming future support, which is a great location to get in the market to take advantage of the next move. So what a lot of traders do is they'll buy support and get out at resistance. Jump in again, buy support, get out of resistance. Now let's look at it in an actual chart that we have here. Now, what you see is you see an uptrend. The bulls are in control. The bulls are making higher highs and higher lows. And so let's watch what happens. In our first move, here the bulls take over right here. They make a high higher than that high. We were in a downtrend right here, but it seems like the bulls broke this downtrend line, came up, made a higher high, and when they made a new high, look how the market gravitated back to this past level of resistance to become future support. Now, here at this past level of resistance to become future support, what a trader will look for is a bullish confirmation, perhaps a bullish candlestick formation that tells the trader it's time to go bullish again, and the market's more than likely going to make a new high. Let's look what happens. See, the bulls come in. This bullish candlestick formation confirms that the bulls are maintaining control. They make a new high, higher than these highs, and then they pull back to past resistance becoming future support. Here the market creates a nice morning star, which is a bullish signal, and then the market goes up and makes a new high. It's at that high, then when the market pulls back, it pulls back to past resistance, becomes future support, makes a new high, and then gravitate back to past resistance to become future support. So this is very, very important as a trend starts to grow. And it becomes very important to the trader because these are great locations to get in the market to take advantage of the next bullish move. Now let's discuss how past support becomes future resistance. Now, if you really think about it, that means the market is going to be trending down. See, what you have is you have more sellers and buyers, more sellers and buyers. And then all of a sudden you get a low. You get a low of support. and the bulls step in, and they are going to try to take the market up to take out that high. And so what happens is it's at this level of support, you get more buyers and sellers, until all of a sudden the bulls say, I don't think we can take over this trend yet. And so they create a high here. They resist buying, which is right here, resistance. And the bears say, well, since the bulls have resisted buying, we're going to come in here and we're going to take out this low of support, and we're going to make a lower low of support. And so this is exactly what happens. Bears take control, they come down, make a lower low. Lower highs are being created, which is a downtrend, lower lows and lower highs. And then the bulls pull back to resistance. See how past support becomes future resistance? And it's right here that a trader will look for a bearish confirmation, a bearish signal to get in the market for the next down move. And so here we have the next down move. Bears took over until they don't want to sell anymore. Bulls step in, support the price, and it pulls back to past support, becomes future resistance. And there you are with your next move. They take it down, and you have a downtrend, a clear downtrend of lower lows and lower highs. Now let's look at it in this chart. What you have here is you have the bears in total control. You can see that visually, spatially. You can see the market is making lower lows and lower highs. If I were to draw a trend line, you can see how the market is staying below that trend line. Now, let's take a look at the first past support becoming future resistance. See, here what you have is the market breaks this uptrend line, comes down, breaks through support, pulls back to past support becoming future resistance. This is a great place right here to short the market to take advantage of the next down move. Now, as the bears come down and make a lower low, look at how the market once again pulls back to past support becoming future resistance. Market tells the trader, hey, look it, we're in a downtrend. Here's a great place to get in the market. Let's take advantage of the next move. And that's how a trend starts to take place. And so these past levels of support that become future resistance, or past levels of resistance that become future support, are great places to get in the market. So let's go to smarttrader.com and let's identify levels of past support to become future resistance and past resistance to become future support, so it will help you as a trader take advantage of this market.